Welcome to the night where we light up the spot. We're trading crypto, finance, you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, that shatter ceilings made of glass. Mad on the charts with rulers by lights. Crypto markets soaring through the night. Follow the trends, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows.
Good evening, everybody, and welcome to Markets After Dark, where we go mad on the charts. Hello, everyone. It is Wednesday, which means it is Throwback Thursday. Tonight, we're going to be throwing back all the way back to earlier today. That's right. I'm going to be I'm going to be going over my prop firm evaluation, go over my day that I had. Little hint, it wasn't good. It could have been good, and it should have been good, and I'll go over the mistakes that I made so that you will hopefully avoid making similar mistakes. Learn from my mistakes so that you can level up as a trader quicker. Learn from other people's mistakes. Okay? All right. But they were so I'll just say I had the right ideas, but the execution wasn't there. Maybe it has to do with me having a day job and trying to do it while I'm at work. Probably has at least a partial reasoning. But also, I'm being a little bit too protective, I think. I don't think I'm giving myself enough space, enough room, because I want to pass the evaluation. So I might be being a little bit too conservative, and it might be throwing me off, but hey, we learn, we adjust, and then we try to not make the same mistakes more than once. So I'll go over that tonight. We'll talk about Powell and his Q&A just a little bit. I mean, we'll just do like an open discussion. No articles tonight. Just charts, going over trades, reasoning behind the trades. Killer setups, man. I posted them. Well, I posted the ideas pre-trading day both in the Piper Academy Discord and the Alexo Crypto Discord. Join the Piper Academy Discord. Link is pinned in the chat. It's dead tonight, probably because price action is kind of lame. It's not great, and we are entering a bear market. Maybe we have entered it. Maybe we have more upside. Speaking of that, let me find something from Twitter. Where is everybody? Y'all quiet. Four people watching? 5? Oh, where is it? Oh, here we go. There we go. All right, what's going on? Let me just go ahead and pull this over and we'll go to this real quick. So Alex O Crypto posted this on X. He said, I heard fractals get good engagement. Let me know. So this is the chart that he shared. Who is here? Say hello. Yes, say hello, Alexandra G. Oh, wait, I mean, Alexandra G is telling you to say hello, people. This is what he posted. Basically, another dip down into a demand zone before building that base and then moving back to the upside. I mean, I know when he pulled that from last year's sideways price action before we moved to the upside. It pulled it from, is that? Pretty sure that's it. We'll look at it in a second. But he said, I heard fractals get good engagement. Let me know. And then I found a fractal and I said, it probably depends on the fractal. It probably depends on the fractal. Actually, since they're both extremes, one way or the other, they both probably would typically get good engagement. But my post has gotten 3 likes. His post has gotten, I thought he had at least 4 on here. Oh, he's gotten 11, of course. Of course, the bulls always get more engagement, right? But I just posted this as a funny. This isn't my actual thesis. Although, it could be a reality. Why? Well, mostly because of what Chair Powell was saying today. Chair Powell seems very uncertain. Chair Powell says uncertainty is everywhere. Chair Powell says corporations are uncertain. He says the Fed is uncertain. And this is in regards to like the tariffs and just economic policy from the US government in general. Like, it's uncertain. We do not know how these things are going to truly impact the market. Neither do businesses. So they're just kind of like pulling back. That's why we have gold continuing to soar to the upside. Continuing the moon mission. Back this up to a monthly chart. How about gold USD? No? Gold/USD. I guess not. Gold. Okay, there we go. Gold has hit the 2.618 at $3,335. It is currently sitting at $3,339. So it's actually breaking above the 2.618 fib extension that is based off of the 2011 high. Right here. And the 2015 low. So pull the fib from here to here, and then you get to the 2.618 extension. Now the 4 0.236 is sitting at about $4,750. Piper says gold to 5K, and seeing as how that is very close, I think we would come up short because 5K is a very strong psychological level, just like how Bitcoin came up short of 100K in 2021. It's just we may not quite get there. Plus, I hear a lot of people saying 5,000. Typically, when a lot of people are saying 5,000 or any kind of like specific price that's like way up there, typically doesn't get hit. But because there's the narrative. The people that have been holding gold for all this time are Peter Schiffs of the world. Are they just going to hold? Are they just holding throughout this? Or are they going to sell? Ever? Are they just never going to sell? Are gold maximalists like Bitcoin maximalists? They're just never going to sell? I mean, I guess. I mean, but what? Can you go to a merchant and say, I heard Piper talking about this morning. Al Jr., what's going on? Good evening, everyone. And Kick Ace. Kick Arse. You too, Al Jr., you too. So yeah, safe haven asset. That's what people go to whenever they see trouble on the horizon. We can see that after the .com bubble crash, gold started to push going, I mean, just started going parabolic right after that. And it was after the crash. 2015. I don't recall a crash in 2015. But the stock market was pretty booming. So, I don't know. But Powell today was very uncertain. And he basically signaled, I don't think we're cutting rates anytime soon, fam. Because we have the potential for rising inflation. Not the potential. We probably will have rising inflation due to the tariffs. It happens, especially initially. You're going to get inflation from the tariffs. You always do, initially. Now, I don't think any country that I'm aware of has ever done such broad tariffs like this administration has done. 10% on every country. I mean, if your goal is to kill the economy, it's how you do it. To kill the global economy, it's how you do it. But because I don't think most people understand the knock-on effects of all of that, especially when you're not going sector by sector and you're just doing an all-out just 10% on imports. Like, it's just not good for free trade. But what are you gonna do? Nothing is in law, so they're all executive orders. Congress technically has to pass tariff legislation, but we're just kind of going all around that. These executive orders, no matter which administration it is, they've every single presidency, they just get more and more out of hand. Trump is ruining our investments. What's going on? Ramen all the way. Let me take us back here real quick because I gotta bring up the Madhouse. What's going on, everybody? How you doing? Good evening, Alexandra G. Good evening, Mike Play. Good evening, Al Jr., and good evening, Kelly. Thank you all for being here. I do appreciate each and every single one of you. Let's see, votes so far. We've got 8 votes for our bear market meal. We've got toast in the lead at 38%. Amazing. 25% say ramen. We got hot dog slices at 12. We got cheese at 25. We got 2, 2, 3, 1, 2, 4, 7, 8. Yeah. All right. So 3 people say toast. I was gonna put like I meant to put on one of those spots fried ice cubes, but you know, it's not a real thing. I mean, you can make it maybe. No. Anyways, shout out to all you guys. Thank you all for being here. I do appreciate each and every single one of you. Let's go back to the chart. All right, so let's go over my trades today. This is BS. Maybe not. We'll see. A bull thesis. Bro, don't tell you've never put maple syrup on a cold slice of bread from the fridge and a glass of milk. Nah, I ain't never done that, fam. I've never done that. Oh, man. But have you ever dipped a French fry in a Frosty? I heard Wendy's is taking away the Frosty. And that makes me sad. All right, so looking here, let's just start off with just a basic overview. So we're on the monthly chart. We can see kind of creating a doji right now, bullish doji. We'll see how the month closes. We of course still have another 2 weeks left in the month. Let's go ahead and pull this fair value gap here on the monthly, and we can see that we have come into this fair value gap, and we've held that middle line. Okay, we've closed above it, continuing to close above it. We did push down, taking most of the fair value gap, but we are still maintaining the midpoint of that monthly fair value gap, and that is bullish. Not bullish, but at least sideways-ish. We could at least build a bottom in here. Okay? As long as we don't come down below that fair value gap midpoint, or close below it rather, I think we're good. Example over here, never closed below the midpoint of this monthly fair value gap, pushed higher. Didn't even revisit that one. What about this one? It's a weak one. Did close below it. So it's not always the case. But context is key. As we were pushing down, we created a fair value gap. And then we pushed straight on through it. Here, don't see a fair value gap. I mean, monthly is just killer. Here's a bearish fair value gap. You come back up to it and reject. Boom, boom, boom. Bearish fair value gap and reject on the monthly chart. All right, so maintaining that monthly midpoint on that monthly fair value gap is amazing. What's going on? Melissa One Love in the house. Crypto Princess. What is going on, Crypto Princess? How you doing? Early bird. Early bird gets the worm. Thank you, Crypto Princess. I do appreciate you for stopping by. for everyone that's stopping by. Don't forget to hit that like button. It is it is free, and it is one of the best ways to help support the channel. Boom. All right, so let's see if we pull a fib from last cycle's high, and not the top. I consider this the top because this was when all the euphoria happened. There wasn't really near as much euphoria here as there was here. Those that were here could confirm that. But this was where all the euphoria was, because this is Coinbase IPO. This was Laser Eyes, Diamond Hands, Elon going on SNL, saying Doge to the moon, all that stuff. All that happened in here. Here, I don't even know. Here, El Salvador accepts Bitcoin from what I recall, or calls it, makes it legal tender in El Salvador, I believe. And then we got a little bit of a pullback off of that news, sell the news type of deal. And then it pushed a little higher. We thought that, all right, this is going to be it. And then we lost it. Conditions are mighty different here than they were here. This was after printing a ton of money for the COVID, stimulating the economy, keeping it afloat. But when you shut down supply chains, you shut down the global economy, how much stuff can you buy? Well, this is why most people started putting all their money into assets like GameStop, Bed Bath & Beyond, AMC, the meme stonks. And then that rotated over into crypto. And then everything just started going banana land. And that was it. That was all she wrote. So now we are in a situation where we have inflation pretty much staying steady, kind of increasing still a little bit. But we also have a pretty strong labor market. I mean, we're still not seeing mass layoffs, especially not compared to 2008. That was a whole situation in and of itself. But I remember at one point we were losing 800,000 jobs a month. 800,000 jobs a month. We haven't come anywhere near that. So, but where is the liquidity? Where is the money? What happened to the $5 trillion wiped out of the stock market? Where is that going? Is it going into gold? Is that what's pushing gold up? Maybe. I'm just lurking, not here to say anything bearish. Whatever, Pie Bear. Army Pie Bear. After Powell's uncertainty, to me, it is very clear that the Fed is probably not going to pivot anytime soon. Wow, I just now realized this. Maybe the cup and handlers were right the whole time. Cup, handle, breakout, retest, off and away we go. Hopium. It's all hopium. Until we prove stuff on the lower time frames, it's all hopium. Plus, I'm not really sure if monthly cup and handles play out. Daily chart. Oh, and good evening to you, Mr. Crypto Winter, Pi Bear. Can Catalyst plays H bar thoughts? I like H bar. It is one of my very few holds. The only question is it going to have the same fate as most other altcoins, where this just continues to fade to the downside back to these lows? Now, these are 2024 lows, so that really wouldn't be as bad as how other tokens have it right now, but yeah, lost on crypto. Sorry, bull div. Wait, what? Brother, could you look at the nice bull div on BTC 1 day, 2 day up to the 4 day? Wouldn't this coincide with the 1 day 200 moving average is right on the golden pocket from the wick at 94.9 down to the wick at 74.5? Any opinions? I have a lot of opinions. Stroll man, I'll buy. Oh, wait. What's going on, Stroman? BTC, please go down to 98.5K. Yeah? Let me see here. But yeah, H bar, I really like H bar. Let me wrap up H bar and we'll go back to Bitcoin. Lost the point of control, or not the point of control. Lost the golden pocket. The reason I have this red line here is just because this has kind of been a little tap of support here, couple taps of resistance here. Saw some resistance before the breakthrough. We back tested it. Now it's just a matter of if any bit of that $5 trillion that's come out of the stock market rotates into crypto. That's basically going to be it. And if it does, watch out, because we're going to have probably a pretty wild and sick month or two. And then it's all going to come crashing down. Because I think regardless whether we go crashing down now, actually, it would probably be better and healthier. Not if we had a quote unquote crypto winter, although depending on, technically just going sideways for several months would be like a crypto winter, especially when you're already back at bear market lows like most altcoins are, some even lower than their bear market lows, so new lows. If you stay down there for several months, yeah, that could be a crypto winter. And this time, this crypto winter, I think we have fewer tokens come out on the other side of it, unlike the last crypto winter where we just had a token explosion. A token explosion. Bro, I just need a 2x or 3x, please. I'll take profit this time. All going to toilet paper and hot dog slices, isn't it? Yeah, wind bounce. We seem bearish. Yeah. So this is literally okay, so this is my best, what I think the most bullish. There's a most bullish scenario, a pretty bullish scenario, a meh bullish scenario, and then there's three opposite of that on the bear side. The meh bullish is we just come up here, we triple top, and we roll over. That's the meh bullish, okay? The mega bullish, hyper bullish, would be if we just go ahead and reverse from here and just start going like parabolic like gold. And then you have somewhere in the middle where we kind of just hang out down here, and then we just kind of grind to the upside, and then we come down and sweep all those lows. We even go backwards in time. Did you see that? And that just kind of gets us a little bit higher. Probably put in some bearish divergences in here, and it just and then it would roll over. Those are my 3 bullish scenarios. Bearish scenarios, we come up here. There's a point of control up here, 786. Can't break the 786 or can't break the golden pocket, and we just roll over. Then we have a meander, bear flag, and then break down. And then we have the Piper scenario. Actually, I don't know if that's a scenario or not, but that is textbook accumulation range in winter bottoms. Yeah, exactly. Just a complete rollover disaster, okay? It's what we don't want. I don't know that we get that, but I wouldn't rule it out. I would definitely stack some, not financial advice, stack some limit orders starting at about 38K and then just move them up. Heavier and heavier the lower you go. I don't see us breaking. But the M2 money supply though, what about it? Did you see my post on X that I shared, or I should say, the post on X that I shared? Is that why you're asking me that question? Bring it on! I got enough quotes from Burlington. Pub prof, so hot. Trust me, this is bullish. You guys, I love you guys so much. Bullish. And honestly, I think I would kind of rather M2 money supply does not directly correlate to liquidity. That's one, yeah. That's one argument. Accumulation bottom, go to the upside. I mean, the thing is we are coming up on summer. Typically, you do get a summer lull. Markets just kind of take a breather. I say typically because it's not always the case, especially when you have Donald John Trump as president. You never know what could happen. But typically you do get a summer lull. You get Wall Street, is on vacation, and things are just kind of slow. And considering all the stuff that's going on, I don't know. There's 2 ways that that you could look at it. It's either things are so crazy right now that people have to not take a vacation, I guess. Wall Street has to stay plugged in, or they need a freaking break. They usually do it in the summer, so why not this year? But there's a lot going on, a lot of moving pieces, a lot of things to work out regarding trade deals and all this stuff. So who freaking knows? Piper knows, and I do appreciate Piper's conviction, because it is hard to have macro conviction, especially when you're kind of in the markets, trading on 5-minute time frames. But yeah, during growth market, sure. Welcome to contracting market. Yeah, that's why I would like to see it go up. There's 105-day M2 money indicators going around that goes up in the next couple months. I forget when. All right, let's see. Boop, 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 boop. I know this is why this is getting passed around, and it's because Powell, Mr. Grifty Guru, yeah, I said it, Out here grifty and guruing. TXMC Trades. I told you guys to follow this guy a long time ago. I hope you did. At TXMC Trades. All right. Responding to this. So, Robert Powell says, I know many of you want to see the updated version of the BTC versus global M2 chart. Here it is, just a very small part of the weekly macro investing tool, MIT, as part of RV Real Vision. Plus, it is time, give or take a few days. It is time. Guys, it is time. It is time. People, you can't create a daily or weekly time series of global M2 when the United States is only updating M2 on a weekly basis and all others are monthly. You are looking at basically 30 out of 31 days of FX fluctuations with a static once monthly global aggregate multiplied behind it. Only China, USA, and Japan have even updated into March. The rest are still on February values during a time when the dollar has been tanking hard. It is just goofy and frankly a scam to show this metric on a lower cadence than half of its underlying data can support. You're looking at an M2 weighted inverse dollar exchange rate 95% of the time. Be better at math. This matters a lot when also considering China is 46% of global M2 all by itself and is the only major country whose broad money supply is above its post-COVID peak in dollar terms as of the latest figures. They are currently trying to ease out of an ongoing multi-year debt deflation and doing a pretty crap job of it. Their M2 goes straight up. Random number week offsets are actually made up voodoo because of the aforementioned monthly cadence of every M2 figure except the US. These charts are overfitted junk using extremely recent history as a thesis for why they should correlate. US M2 is below its 2022 peak, by the way, and growing at the slowest pace since Bitcoin's birth, excluding 2022 to 2024 when it was negative year over year. Stop being dumbass with data. Stop proliferating scammy analysis. Scathing. With the current tariff wars, border capital flows are crazy high and bank balance sheets are crap right now. Preach louder for those in the back. So yeah. Couple of folks have mentioned M2 BTC correlation. Look, assets being directionally sympathetic on a monthly basis with the broad supply of the money supply they're based in is not an idea being debated. The main critiques I gave relate to presenting a daily weekly metric using monthly data, which essentially is just echoing FX gyrations, failing to recognize how that disparity creates noise, and using overfitted offsets of that data to try to forecast a future for a content audience. Dang, bro. Dang, maybe that M2 ain't that important. Because it ain't. Oh, man. M2 excludes key components like central bank balance sheets and cross-border capital. Oh, I read that. During growth market, sure. Welcome to contracting markets. Yeah, exactly. So the market is contracting. People are pulling back. USDT.D trying to come to the downside, but what is it? This is the daily. Looks like it's starting to push back, trying to push back to the upside here. Let's do USDT plus USDC.D plus, I don't know, DIA.D die? Is it DIA or DAI.D? Any other stable coins anyone can think of? I think that's enough. That's most of it anyway. That dominance of the stable coins. W bottom, push higher? Maybe. Bearish divergence? I don't know if that's how these charts work. I've stated that a few times, but could be. But if it is how these charts work, then we just broke out. Maybe it gets a back test and then it runs to the upside. But stablecoins, here's your safety trade. And stablecoins are moving to the upside. We do BTC USD plus USDT.D plus USDC.D plus DAI.D plus RLUSD.D. That's Ripples. I don't know how much they have, but let's see. Invalid symbol. Is it because of the RLUSD? There we go. Wait. Whoa. Maybe I should do BTC.D. Ah, dang it. BTC.D plus USDT.D plus USDC. Oh. USDC.D. Let's just do these three. Okay. Three biggest. So we've got stable coins and Bitcoin dominating the market, sitting almost at 72% of the market. Bitcoin by itself is sitting at almost 64%. Okay. So this is what we call the safety trade. What that means is as people pull back, go risk off, they go into safe assets. It is interesting to me that the USDT dominance is increasing, but the dollar itself is falling. It's kind of interesting to me. But safety trade. This just shows risk off. Risk off. Because if you're going to pull out of crypto, most people aren't going to pull out of their Bitcoin, maybe a little bit. But most people are going to go into two things, and that is Bitcoin and stablecoins. Outside of that, they're taking all their money out of all the altcoins. BTC won't be making new all-time high. Maybe not. Maybe not. But its dominance could still come in. It's trying to break this high that it set back in February. So this is when I thought, all right, after we had this big pushback, I thought, all right, here we go. Nope. Take a look at the ES. How we looking? Yes. We got the bounce. We got the breakout, slam back test. We want to see a V-shaped recovery. I mean, that's all we can get right now. We've got to see a V-shaped recovery. Otherwise, it's just, if it just starts to like kind of chop, then it's definitely going to come down further. But you're talking about a summer of sideways chop. Now, an argument for a bullish Bitcoin, maybe creating the meh high, or just barely breaking the high, or even it could go to that 130,000 max, I think. Kind of like with Bitcoin, with altcoins, when Bitcoin goes sideways, altcoins, if they're going to do anything, it's while Bitcoin's going sideways. I imagine the S&P going sideways might be when Bitcoin could pop off. And then Bitcoin goes sideways, and then altcoins can pop off. And then instead of everything, and then, yeah. instead of everything peaking in November, everything dies in September. I don't know. We'll see. That's AB Army Piper. All right, we've got 15 minutes left. I have not gone over my trades at all. Let's go ahead. Let's see. We do have that hidden. I know we have a hidden bullish divergence there on the weekly. Standard bullish divergence on the 3-day. And coming down to the daily, we have that bullish divergence on that as well. That could all be short-term bullishness, okay? So just keep that in mind, is that could just bring up to this upwards resistance, and then we could roll over. Now, if we were to break through with conviction, all bets are off. We're going to the moon, or at least it's going to look like it. Tony Soprano, what's going on, my guy? Hope you're doing well. It's Tony Surfprano. Evening chat. Good evening, Bandage. I almost called you by your real name. How dare I? That's your dead name. What's going on, Harp? How are you all doing? Thank you for being here. But yeah, that money flow on the daily is just, it's in the red. It's thick. And after these past couple of days, we're starting to turn back to the downside on that money flow. And yeah, it's not looking promising at the moment. So, head on a swivel. How dare you, sir? Yep, chart prime. Wait, what? Yes, ma'am, AB. What? Wait, chart prime. Dead name. Sorry. Let's see. All right, so I want to get into my trades from today and why I screwed them up. All right, so yesterday, this is what I mapped out for today's session. Hey, LBC, do you order block indicators? Do your order block indicators work well? I've found it, I mean, most order block indicators are fine, but what's more important when it comes to order blocks and smart money concept trading in general is context, market structure, and context. Context is key. Time and price is key. When things are happening and why they are happening, that's what matters most. If they are happening at an order block, then we're looking, and yeah, that's what you're looking for. You're looking for the liquidity grab and the run, okay? So, was this? Yeah, this is Tuesday. Okay, and I am on the hourly. All right. So I marked that off. I marked this off. So I marked off 2 inefficiencies. I did not mark this one. So I marked these off prior to today's session. Let's go ahead and drop down to the, so what I was going to look for was a market structure shift in one of these zones, okay? One of these zones. These should actually be red because I'm looking for shorts at these areas. And I will tell you exactly what I did and how and what I got wrong and why. Because as you can see, both these levels played, right? But somehow messed up the trades. All right, so first of all, let's get into, let's see, 7 a.m. All right, so it was right at market open when I got long. I saw this dip down. Then I went long. Somewhere in here. Not over here, over here. Okay? I made the mistake of putting my stop loss a little too tight. And I got stopped out. That was my first trade. Imagine if I had just put my stop loss at the low, like I should have. and aimed for that next level, that first level where I was expecting us to go to, that would have been a killer banger trade. But because I put my stop loss too tight, I got taken out. So, lesson learned, put that stop loss at the low. Don't have it in the range, just put it at the low. Manage your risk, through the margin that you use. Okay? So, first lesson was right there. Second lesson. Hard lessons, these are. I saw this breakdown here, and I went short. By the time it got up, and before it even, I put my stop above the high. Before it even got there, I cut the trade. Because I just saw it going in against me. Plus, I broke a rule. I did not wait for this candle to close below this low. I got antsy in the pantsies. Don't do that. So, that's okay. I can live with it. We break through. We pull back to that zone. We push up. And this is where no, wait. One, two, there's a third trade somewhere. Oh, I got in here, somewhere in here. Because this was actually, I thought this was a bigger fair value gap. Was it a different time frame? Either way, I got in here a little early. I was like, all right, we're looking good. Then we got the bounce, got stopped out. It is what it is. Then it finally got up into my top zone that I was going to watch for a market shift from. I was at work. I didn't know or had forgotten that Powell was speaking today. And usually when you have potential high volatile moments in the markets, as a scalper, you want to go to 1 and 3 minute time frames as a scalper, okay? This is just for those of us that scalp. We did get SMT divergence at the same time. Really hard to see when you're looking on your phone, but we did get the SMT divergence. I missed the trade because I was on the 5 minute time frame. And once this happened right here, and I didn't get a fair value gap, the one thing that I did consider was this potentially being a breaker block, but because I'd already taken 3 losses on the day at that point, I was just not willing to take that risk, even though that would have been just a complete sniper entry and would have been fire. But price was basically, especially when you're trying to work and do things at the same time, price was just moving too quickly, or not too quickly, but on the 5 minute, the structure hadn't formed that told me, okay, it's time to go. Because what I want to see is a displacement of this low. See, I'm on the 5 minute time frame, so I want to see this low taken out. We got the displacement on that low, and that's when you look for that wick to come up to the upside to get in on this breaker block. However, price just kept running. Now, had I gone down to the 1 minute chart and I was looking at this at the same time, we've got Ethereum over here. Let's put this on the 1 minute chart. This is Powell speak. There we go. And this is SMT divergence. We get it at the high here. Okay, so SMT divergence is when 2 highly correlated assets diverge in price. It usually shows that one of them, and it's usually Bitcoin, is manipulating the market. There's manipulation going on. They're trying to push up to get more, grab more liquidity so they can push it down further. You get SMT divergence, which is when at the exact same time you have ETH putting in a lower high, as Bitcoin is putting in a higher high at, context is key, like I said, at that point, that fair value gap that I was watching and had marked out the day prior and was going to watch for us to get into. Once we got into that, we created the SMT divergence. That was confirmation that this was going to be a fire bear entry. We get the breakdown on the 1 minute. We do close below this low, and then we come back into this fair value gap. Now, if you had a tight stop, you probably got stopped out once you entered here, depending on how tight your stop is. But I always want to put it a little bit above the fair value gap. So I'm remembering that too. I'm putting a little bit above the fair value gap. So you live, you learn, but you live to trade another day. You know what I mean? Second opportunity would have been a breaker block or just an order block over here. Why is my rectangle not working? There we go. And once you break that, close below that, you come back into the order block. Let me get that whole thing from high to low. These 4 candles reject finally for the final time at the midpoint, and then off to the races you go. So would have been a killer trade. Woulda, coulda, shoulda. Is what it is. Had a bad day. It happens. I preserved my capital. I am still in the positive in my account, over my starting equity. Starting equity is 50,000 or 5,000, not 50,000, 5,000, and I was at 5,091, 92 at the start of the day. Now I'm sitting at like 5,020. So I lost like $70 today. It is what it is. No grasshoppers again this year. Not a good sign for any rain, but the bat migration has come early this year, so it's going to get hot sooner. Yep. But yeah, so you live, you learn, you trade another day, you preserve your capital. 3 trades, and 3 losses, and I still haven't even broken back below 5,000. So one of those losses was, or 2 of those losses were just bad losses, but it is what it is. But hopefully me going through my trades and sharing my experience with you guys, and me kind of learning, because I'm having to be way more conservative as I go through this whole prop firm thing. Usually I can have a little bit, usually I'm putting a little bit more drawdown on my stop losses to help my trade breathe a little bit. And maybe I should just do the same and just for the prop firm and just trust myself. And so yeah, good learning experience. You need them. You need the learning experiences in order to improve. There is no failure as long as you're trying to improve and learn from your mistakes. Okay, they're but short-term mistakes that can turn into long-term growth and gains. But we are at the top of the hour, guys. I need to get my butt to bed. And yeah, so that was my day. I hope you all had a better trading day than me, but we'll get back at it tomorrow, and we'll see. We'll consider economic data. We got building permits tomorrow, I believe. It'll be early in the morning, so could be looking for some type of New York, some type of sweep and reversal during New York. I imagine it's probably going to be something like, had a great day, Piper. Thank you. I'm not Piper. Okay. But yeah. So even though my bias was short, I still effed this up. All day my bias was short and I still messed this up. But anyways, it happens. It happens. Happens to the best of us, but for the worst of us. What was I? Oh yeah. That's why I brought the screen back up. So yeah, I'll be looking for price to come into premium tomorrow and potentially get a rollover, because one thing that we did not do that I do want to go over real quick is we did not take out equal lows in here. So we have a lot of liquidity sitting down here below these relatively equal lows. We got lows all the way over here. We got these lows over here. We've got this whole consolidation range over here. You know, I expect us to come back down into that. But what we could see first, as I was saying, is pull my fib again. Oh no. We get we come up into discount, which is above 50% retracement. Usually we come and, you know, we want to see it come into a point of interest, like a fair value gap or order block, and then we do the same thing that we were looking for today, and we just look for a reversal in that zone, and then we aim for the equal lows down below, if not lower, depending on if you trail your stop or not. But I would definitely at least take some profits off the table if you are to enter a trade somewhere above here, if it even gets back above there, since we've already come back above there. But in my experience, we do have a bunch of highs resting right here, so I could see a bunch of short stops resting above there that the market makers may want to come and take out before they ultimately roll this thing over. And we could even see that during the London session while we're all asleep. And maybe tomorrow we're trying to figure out in New York, what are we going to do? Are we going to get a reversal, or are we going to just chop about, or are we going to get fake out to the upside? Maybe this does just hang around here. New York opens here, and then we just come down. Maybe we create a nice consolidation range overnight with some equal lows, equal highs on both sides, and whichever side gets taken out, typically you'll see price run back to the opposite side. So just for an example, let's just say this comes up, this comes down. Let's say this double taps where we come up here, we come up here, we come up here, we create equal highs, we come up, come into the fair value gap or order block, and then we roll over. Or come like this, create those equal highs, equal lows, come up, come down, take out all the lows, and then move to the upside, and then roll over. Either way, I think we're rolling over. So it's just all going to be a matter of when and where. Okay, but we'll see. I'll keep continuing to share everything, my whole prop firm journey, and hopefully everything turns out for the best. This is a tricky market, and typically when the market is tricky, it is because it is bearish. So, and we are still high time frame bearish. We have not broken any key structure. So just be safe out there. The bias is bearish. So you should probably treat every pump as a scam and to fade it until the trend changes on the high time frame. Once the trend changes on the high time frame, then we can look for the longs, the scalp longs. I mean, you can go long and short both in one day. I mean, as far as like your swing trades, if you're a swing trader, yeah, you want to see that high time frame market structure break. So, but for now, that's what I've got. So look for the shorts tomorrow. But tomorrow we'll be back here on the Piper Academy Network for FOMO Friday. We'll see what the markets are looking like tomorrow. We'll go over possible scenarios for Friday. But yeah, I do appreciate all of your support. Let's take a look at the poll real quick. We got 23 votes. 52% of you say ramen. All right. Okay. 52% of you say ramen. 9% say hot dog slices. 17% say toast. And 22% say cheese. So the winner is Top Ramen. That's what's up. Of course, everybody's eating ramen. Me, personally, out of these, I don't even remember what they were. Hot dog slices. I think it's me and one other person. Why not ramen? The sodium kills me, bro. The sodium kills me. And I like salt, but it's a sickening thing. I can eat like a third of a bowl of ramen and then I just get tired of it. It's just too much. But anyways, that's just me. But thank you all for being here. I do appreciate each and every single one of you. Every single one of the alumni. And yeah, we'll be right back here tomorrow in the Piper Academy Network. Don't forget to check out Good Morning Crypto tomorrow with BC Port Corp at 6:30 a.m. Eastern Standard Time, followed by the Morning Market Report with the Army Piper and the OC guy at 10. At 8, we got Trading with OC, and then we'll be right back here for another episode of Markets After Dark, where we go mad on the charts. Mad love, everybody. I'll see you all tomorrow. God bless. Hope you all have an amazing, beautiful, wonderful, radical sleep. I'll catch you out. Catch you later. Peace out. Mad love. Good night. Bye.
Welcome to the night where we light up the spot. We're trading crypto, find out you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, that shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trend, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows. Analyzing trends while the world lays low. Markets after dark were only brilliant shows. Hit that subscribe and join the ride. In the world of finance where fortunes collide. Lunar's path will be your guide. Through the market storm or the market tide. Charts with Lunar's bright light. Crypto markets soaring through the night. From Bitcoin markets soaring fast. Markets after dark, that shatter ceilings made of glass. Mad on the charts with Lunar's bright light. Crypto markets soaring through the night. Follow the trend, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the motherland.